The idea is that the most likely scenario is the dollar becomes worth less, and then it's worthless or nearly so. And that's when we have some type of reset. And this is when people will do anything. Again, it's a psychological event. This is not that people will even understand the precious metals and their part in monetary history. Most won't. 90%, 95% after it's all over and it's reset will have no idea that gold was a protection. All they'll know is those nasty speculators made a pile of money, which they didn't. Gold doesn't change. The number of ounces someone holds will remain the same. It's just what is it valued at in the marketplace, far higher than what it was previously.
Before we get going, I've got to do a libertarian's favorite thing to do, which is to give my disclaimer. And I'm going to give this under duress so that way men with guns won't show up at my house to put me in a cage, extort me, or even kill me because I didn't have this in there. Now, everyone who does these always starts by saying, well, we're not financial advisors, but actually I am a financial advisor and a certified financial planner at that. So here we go. The content provided by both the Liberty Advisors Show and the Crypto Wealth Show are educational, informational, and for entertainment purposes only without any express or implied warranty of any kind. Both shows are owned by Libertarian Advisor LLC, which has no affiliation to any investment firms I'm associated with. You should always run all investment ideas by your own financial advisor. If one of those ideas happens to be crypto assets, your advisor is more than likely going to tell you that you're crazy, at which point you can come talk with me and we can see if it makes sense or not. So now I've been able to successfully turn my disclaimer into an advertisement as well. You can go straight to my website at thelibertyadvisor.com where you can click on Work with Tim and schedule a free 15-minute consultation with yours truly. Also, there's another full disclaimer with all the crypto assets on there as well. We don't have any investment minimums. We have different programs people can invest in depending on how much assets you have with us. If you don't want to have any assets with us and just want advice, we also have planning packages available for that as well as hourly consultations. Today is January 22nd, 2019. And if you are listening past April 2019, I can't guarantee that I'm going to be one who's personally going to be on that phone call with you, but someone in our office can help you or steer you in the right direction. Now, there are many factors one must discuss before they invest, and there really is no way that I should be giving any blanket advice to anyone because there's so many different factors that are going to affect whether or not something is right for you. If this is the Crypto Wealth Show, I'll give the same disclaimer now as when I first recommended Bitcoin at $30, and the same disclaimer I gave when I first talked about it was at $4,000. Cryptocurrencies, including Bitcoin, are probably the riskiest thing anyone can invest in. They could go to zero, although I think the chance of that happening with Bitcoin is relatively slim, but probably over 90% of the cryptocurrencies as of today, I think will go to zero. This is not something you want to jump into to get rich quick. We have a free course available on our site, and I encourage any newbies to take the course before they invest. You should know the philosophy behind crypto, the tech, how to store it on a cold storage device, and learn from it over a decade of mistakes other people have made, so that way you don't have to make those same ones. In the event we mention any stocks, it is only because they are in the news, and this should not be taken as a recommendation to buy, sell, or hold. If we mention any cryptos, it will be because of the tech they are employing or because they are in the news, and this is not a recommendation. Be careful out there and do your own homework, especially also, I guess I'll throw this in there too, if I mention any options. Options can be the riskiest way you possibly invest. They also could be the safest way you invest. And if you don't know what you're doing, you're going to get absolutely wrecked. So do not go into options unless you know what you're doing or you've talked with your own advisor. But in any event, we are a very new show and we've been growing like crazy. We are very grateful for everyone that's been tuning in and sharing the podcast and sharing the show. You can go to thelibertyadvisor.com, see all the platforms that you guys catch us on, and subscribe. And if there's any subjects you'd like us to cover, feedback or recommendations, please head over to info@thelibertyadvisor.com. And with that said, let's start the show. Welcome to the Liberty Advisor Show. Today we have a very special speaker and guest with us. We have David Morgan of the Morgan Report, and he's also a fellow TDV investment speaker and Anarchapulco speaker. David Morgan is a big picture thinker, and his main focus is educating people about honest money and the benefits of a sound financial system. His ideas can be seen in the movie Four Horsemen, and I'll have to check that out. I saw some of that, a little bit of that yesterday. And as publisher of the Morgan Report, he has appeared on and been featured on CNBC. We won't hold that against him. Fox Business, Wall Street Journal, Futures Magazine, The Gold Report, and many other numerous publications. And the first time I heard about David was last year at Anarchapulco. And from what I've gathered about David and from other attendees is that his presentation is one that people did not want to miss because of his impeccable reputation. And I can't say I remember all of it because it has been about a year, but I do remember that I did attend your talk last year, and definitely look forward to hearing you again. And you guys can follow David's work and subscribe to his premium content at the morganreport.com. And I'd just like to welcome David to the show.
Well, thank you so much. It's themorganreport.com, and I appreciate the interview. Thank you.
Yeah, no problem. And, as a highly sought after speaker and someone that speaks at a lot of conferences, how did you get tied in with Anarchapulco, and what do you think of, how Anarchapulco really kind of stacks up against other conferences that you speak to, at least liberty-minded conferences?
Well, probably because I've known Jeff for so long. I mean, Jeff was on the same speaker circuit that I was, and so we would cross paths from, time to time. And one of the conferences that we attended together was run by Kerry Lutz, and it was basically a kind of a freedom type of a conference, more so than just an investment conference. Greg Manarino, some other pretty well-known names were there. And so I asked the presenters, excuse me, not the presenters, but the host, the event manager, what they really wanted. And he said, well, you can go kind of wherever you want. And so I stressed freedom as my talk. And it was interesting because I still remember this day that Jeff said, after I heard David's speech, I decided to redo my entire speech. So he got up and kind of did it off the cuff. So that was kind of, I think, one of the main reasons is we've known each other for a long time. And, I think we've watched each other grow and progress, 2 steps forward, 1 step back kind of a thing. I mean, there's a couple of conferences where, let's say, Jeff wasn't at his peak performance, but I never held it against him. Certainly I wouldn't say I'm a father figure to him, although I'm probably 20 years his senior. But, I'll just say it for the public record. As far as I'm personally concerned, Jeff's grown a great deal over the last 5 years or so. Always respected his intellect, always respected his investing abilities, always respected his honesty. But let's say that all of us, can get to our best, but none of us can ever be perfect. But I've seen him on a path, so I don't make it too much about Jeff. But I'm honored that he's always included me in the conference because I am very outspoken and I'm very opinionated, but it's a studied view in most cases. It's not just because I want it to be so, it's because history has taught it such and such.
Yeah, no, that's really interesting. And can you give us any insights on what you might be talking about this year down there at TDV?
Boy, it's a tough one. Everyone expects something about the silver market, which, I'll probably say a few words about the precious metals. But I think my main thrust this year, and I'm still putting it in my head, is going to be the future of the blockchain, with the big question, and this is a question for me, I don't have an answer. I want people to think about it. Is the next move up in the blockchain going to be gold and silver backed cryptocurrencies? Question mark. So I'm going to make a case for why or why not. I'm going to leave it as an open-ended question. But I think there's been a big shift between the initiation of the blockchain methodology and a lot of these 1,000 types that are basically nothing more than fiat in disguise that really have nothing of value behind them, have fallen to the wayside. Of course, Bitcoin's off from, whatever it was, $19,000 high to, $3,400 or so recently. So I think there's a lot of questions surrounding that whole sphere. I don't claim to be an expert, but I do claim to be a pretty deep thinker and a critical thinker. So my lecture, I think, is going to revolve around that. Just get people to think about it critically and what place does it hold. And that's an individual choice. If I claim to be a libertarian and, slash anarchist in the true sense of the word, what the word really means, then certainly it's up to the individual to determine whether or not that regime that methodology suits their needs or does not. I'm certainly not going to say that it's right or wrong for anybody. They can determine that for themselves.
Yeah, and that's one thing you've pointed out with the language is that none of the terms really mean what they really mean. I mean, conservative doesn't really mean conservative, and liberal doesn't mean liberal, and anarchist doesn't mean throwing, Molotov cocktails through government buildings with mask on your face. And so, they've just really have stymied the language. And I'm glad you brought up the cryptocurrency backed blockchains, because today on Zero Hedge, I was reading an article where it was talking about somebody who was trying to take, I believe, silver and gold out of the country, and he had different, maybe stacks of, silver eagles, and then they were basically, giving him a very hard time for trying to move the silver out of the country. And so, people were commenting that, one way to get around this would be to use different gold and silver backed cryptocurrencies. I know people like, Peter Schiff has his, I believe it's some sort of gold card, but I couldn't find my social security card, so I couldn't sign up for that one. But, what is, I guess, sort of jumping around here, but what would be sort of, one of the better ways for someone who maybe is just starting off to get into silver? Because there's got to be so many different ways. You've got people out there who are selling different numismatic coins, and I'm guessing that's probably the number one way to get ripped off, is that, you see, several people, probably an older generation that gets maybe targeted to the more of the Fox News crowd, where they're buying high premiums where they're probably never going to recover those. And then you've got other people where you've got the different gold-backed credit cards and silver-backed credit cards, debt/debit cards, and then you've got people that are maybe just going out to their pawn store and buying junk silver. Is there any, for someone who's just starting off, I mean, do you recommend that they just buy plain bullion and nothing really fancy and just kind of stick to the basics, or what would you kind of recommend? I mean, at first they probably recommend they go to the morganreport.com and actually get educated on this stuff, but because no matter what investment it is, you just don't want to jump into it because you heard someone on TV or you heard a podcast with somebody talking about why you should go buy something.
Exactly. I think the best place is just to type in any search engine 10 rules or the 10 rules of silver investing, or 10 rules of silver investing - David Morgan, and that will bring up. I did a whole video. First of all, I wrote the 10 rules of silver investing for the Investing Rules book years ago, maybe almost 2 decades ago now, and that still applies. It also, I did a video series of it that's on my YouTube channel, and I've had a few interviews over the years about it. So there's lots of information. The 10 rules are very succinct. You can find them pretty easily. The YouTube channel embellishes them, goes through each rule and adds on, my wonderful voiceover about, each rule. I kind of expand it. But that's a place to start. But in a nutshell, you start with real silver first. You buy the lowest premium. You don't buy anything that's got a premium on it much above the silver content. And that's where you start. Going off to the blockchain, this is what I would recommend for people that are sophisticated investors, meaning they've probably been investing for 3 to 5 years, understand financial terms, have had a loss or two. They've accepted that they don't expect to win in everything that they touch. And then a portion of their holdings can go into the blockchain if they so choose. I think it's a great way to diversify. And there's a few that I like. I've looked at a few that I'm neutral on, and I don't have time to study every one of them. One of my analysts basically spends almost all of his time every month writing the blockchain review that we've been doing in the Morgan Report now for well over a year. I know Jeff adopted on the blockchain earlier than we did. Personally, I'm really not that favorable to most of the cryptos, to be honest with you. I am favorable to the blockchain methodology, and I am favorable to asset-backed ones. But again, that's not for me to tell you what to do. Coming back on point, certainly it's a great way to store metal, spend metal, and not have to worry, as you just outlined at the start of this part of the discussion, that, hey, look, I need to leave. It's my property. And what right does some authority figure have to stop me and question me about my personal property and whether or not I can take it with me or not? I mean, come on. That's about as anti-freedom as you can get. And yet, as you well know, it happens all the time.
Yeah, I've got a term I've come up with where it's FINO, where that's people that are freedom in name only. And we salute do all this different freedom oriented stuff, but when you take a look at just even current events like what they do with Roger Stone, where you've got 27 armed men breaking into a 67 or 66-year-old political consultant's house, just you got to ask yourself how much freedom do we really have? And I guess another thing I wanted to bring up is one of the Bitcoin, I should get some feedback. So one of the Bitcoin early adopters is Trace Mayer. You may or may not know him. So with Trace, he's come out with some of his recent videos and said, at least regarding crypto, that you should have a certain amount of Bitcoin that that you're holding on to, that you're not going to sell. And then you've got a certain amount of precious metals or Bitcoin that you would trade rather. And I imagine that you probably have a similar probably philosophy where, if you should have, probably a certain amount of silver that is just there, it's stacked. It's for when, what eventually hits the fan. I mean, no one has a crystal ball. And when that's going to happen, certainly you're probably in the same camp as me, that you're probably more surprised that it's gone on this long and that the noose around your neck has gotten even tighter and tighter. But was that a strategy that you'd recommend, that, you've got maybe a certain amount of like, hey, it's at, $46, probably a good time to maybe trim some of your positions. And I just want to get some more feedback on your strategy.
Oh, absolutely. I mean, basically the way I break down the Morgan report is top tier, mid tier, and speculative situations. And then I do time the market as well. And, there's so many people that seem to know everything and put it out on the internet. And they really, unfortunately, really don't know that much. And certainly I'm a learn it all, not a know it all. I'm learning more. It doesn't mean I'm perfect, but if you're unwilling to trade these markets, you're really doing yourself a disservice. The problem is most people overtrade. They don't know how to do it effectively. And that's one of the things I teach to my premium members. It's exactly how I do it, because they get to see exactly how I am doing it. I make a video as I outline it, but certainly there's a core position that's kind of your legacy investment for most of my members. That's going to go to their kids or to a charity or whatever they choose to do with it. Most of them don't need it. Some do. And we don't know the future. Maybe all of us will need to dip into it. It's hard to say, but that is the philosophy. And I think that's a good one, because again, even though people say, you can't time, you can't trade, you can't this, you can't that, technical analysis means nothing, blah, 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 blah. Look, I've got 40 something years in these markets. I've been investing since I was 16 years old. I've been to frickin' every seminar out there that's worth a darn, and most of them that are out there now really aren't, in my opinion. But, I've talked with some of the best out there. I mean, I got to learn from William O'Neill, the founder of Investors Business Daily. That guy probably does a lot better than Warren Buffett, but he's so modest, he just keeps his mouth shut about it. So, I'm sorry, I'm getting a bit of a rant, but no, you want to maximize it. And the problem with most people is that they won't stick to the plan and stay consistent. They hear about trading plan ABC, they buy it, they put it on their, the machine, they trade for a while, it works for a while, it's really great. Then they hear about trading plan XYZ is better than ABC. So they switch horses in the middle of the stream. And this is really bad. You have to also have one that suits you. I mean, I cannot day trade. I've got friends that can, I've watched it, I've seen it. I've even gone down to one of the best in the country that teaches day trading. And it's just a big headache for me. It's just like playing a video game. I'm not a video game type. For me, it's just, no. But position trade, when I got into silver at 19 and got out at 48, I mean, there are a lot of people who left the Morgan report then. Believe me, they followed me into that trade and they're pretty happy at the top.
Yeah, and people are always, I'm sure, sentiment probably plays into a big part of this. It's when everybody wants something, it's usually the time to be trimming your positions or using some risk management techniques. And when nobody wants something, that's usually the best time to buy. I know I moved here to Arizona in 2011, and everyone's like, "Don't you know the real estate there crashed? And what are you doing?" And only an idiot would go down there. After I'm like, "Yeah, well, let's see who's the one." I mean, it's funny. I actually just sold my house, so now I'm renting. So I'm hopefully time that out exactly perfectly, but who knows? I mean, not giving any blanket financial advice. And unfortunately, I'll just make the caveat, I am a financial advisor. So, unless I'm your financial advisor and you're listening to this, this is all, you should talk with your own advisor and study all this stuff up. We're not giving any, blanket recommendations of, people should definitely do this or definitely do that.
And I guess, switching gears, here a little bit on the economic side, it just seems like so many things are so crazy right now with everything that's going on. I mean, you had, what was it, October 3rd, the Federal Reserve came out and said, we're nowhere near the natural rate of inflation. And then 3 months later, actually, we're very close to the natural rate of inflation. And I actually sent out a email to for the people that opted in when I spoke at TDV. I only sent out like 4 emails maybe all year. One of them came out October 4th, a video I made October 2nd, basically going over like a whole litany of reasons of why this is not the greatest economy in the history of the world. And I did lose quite a bit of followers for, because they take it so personally that it's like an indictment against Donald Trump when, there's a lot bigger things than Donald Trump. I mean, there's, you could put Jesus in there, to run everything. And there's no way you're going to fix anything unless you get rid of the fact that the money is based off of debt. So for me, what I see as the biggest problem going on, or the biggest issue going on right now is, you've got the Federal Reserve is having the $50 billion a month that's going off their balance sheet. Then you've got the European Central Bank, who last month stopped their money printing quantitative easing program. And it just seems like those are just such headwinds that, eventually it's only a matter of time before the rates are going to have to be cut back down to zero. And then at that point, there's so much uncertainty because it's like the people realize at that point, okay, the game is up and we're stuck at zero forever, which actually in 2011, I wrote a client an email saying that the Fed is stuck in a rock and a hard place. And my broker dealer at the time, actually, who intercepted the email and slapped me on the wrist saying, you can't say that the Fed is between a rock and a hard place. So, I mean, they literally like handcuff you as an advisor. And I had to have clients who had to sign waivers if they wanted to keep more than 10% in cash, because they're worried that the SEC will then come down to them. They're charging people for, which, last year being in cash was actually, one of the top positions you could be in, but you're never going to hear an advisor actually say that. So I guess sort of rambling on this right now, but, what do you kind of see as the biggest economic, threats that are going on out there? For me, really can kind of shake out, one of two different ways, either, when the Fed eventually lowers rates, then maybe the stock market and, goes to infinity because people, realize that we've got to keep printing more and more money, or people realize, hey, this economy is not as good as we've been told, and then things can go down. And so it's just such an uncertain time right now. And eventually, I just see that in the long run, I guess in the long run we're all dead, but in the long run, I just absolutely see that the Fed is going to, and all the central banks are going to have to keep printing more and more money. And in the long run, I don't see how that's going to be bad for precious metals. And with people not paying attention to gold and silver, by and large, I mean, obviously our audience does, but the average person that's out there is not really paying too much attention to gold and silver. And so what do you kind of think are some of the biggest economic trends that are going on, or threats, or kind of, I guess, perfect storms that are brewing they're on your horizon right now?
Well, I think you outlined it near perfectly. I really don't have much to add. I just state a couple things. One is these things always end badly. It's the first time it's really a global problem. I mean, in years gone by in monetary history, you've had the event that took place, Weimar Republic is often referred to, and of course Zimbabwe, but that's basically very important in those nation states or nearby countries that surround them perhaps, but nothing like what's going to take place with the U.S. dollar failure. Most of us, yourself included, and I'm making a presupposition, you can counter this if you choose to, if I'm presuming something valid, but most people think that, and rightfully so, that the markets are so manipulated that the Fed itself or the central banks at large can control interest rates up and down because they've been doing it for so long. But there still is a chance that when the markets start to manifest into what I would call natural law, that the interest rates actually go up because the market says, I don't trust these dollars, and the only way I'm going to hold it for a long-term bond is you have to pay me more or I'm getting rid of it. So it is possible that the market forces could take over, and you could see higher interest rates that the Fed doesn't have control over, the central banks lose control. That's not really an aside. I just want to point out it's possible, but not very probable these days. So you either have a default on the long term.
Can we back up just 1 second? I just want to make sure I understood you. Was that it's more than likely that natural law will take over, or that the Fed is going to keep gaming things forever. I just want to make sure I understood which way you were.
Yeah, well, I don't want to talk about this. It's inevitable that natural law will take over. What I'm pointing out is the most likely scenario is not what I outlined, that natural forces take the interest rates to where the market determines they should be. So, I mean, as a thought experiment, knowing that this debt cannot be paid back, and if you're going to loan money long term with a T-note of 10 years or the long bond at 30 years, I mean, what kind of interest rate would you really expect for that kind of risk? And I'd say, well, minimum of 5%, more like 10%. But if you went at those rates, we'd crash the market because you wouldn't be able to pay back the interest on the national debt whatsoever. So that's a least likely scenario, but I just want to outline it, get it on the record. If you look at Jim Poplava's work, he took one summer several years ago and he did a study of what happens in these inflationary environments if you are on a fiat system only. And in every case that he studied, basically they went into some type of hyperinflation and destroyed the currency. So that's the most likely. And that's what all of us have been talking about for so many years, where the dollar that's, the 1913 dollar, for people that don't know, and anyone that follows you probably does, is worth about 3 cents right now. So what we're really trying to determine is what value of that 3 cents will remain over the next, 6 months, 3 years, 5 years, or 10 years. And the answer isn't much, and no one knows how fast it's going to decline, but that's what we're really talking about. So it's a psychological event. It's not a pinpoint because of the bond market or whatever. There could be a trigger, like the Credit Stalt Bank in the Great Depression. No-name bank that didn't mean anything, meant everything looking backwards. But the idea is that the most likely scenario is the dollar becomes worth less, and then it's worthless or nearly so. And that's when we have some type of reset. And this is when people will do anything. Again, it's a psychological event. This is not that people will even understand the precious metals and their part in monetary history. Most won't. 90%. 95% after it's all over and it's reset will have no idea that gold was a protection. All they'll know is those nasty speculators made a pile of money, which they didn't. Gold doesn't change. The number of ounces someone holds will remain the same. It's just what is it valued at in the marketplace, far higher than what it was previously. So I digress, but I think the most likely is destroying the currency. That's what usually happens. I want to also say that don't get the idea that the hyperinflation is going to be a Zimbabwe type of event. It won't. There's too much of a counterbalance in the bond market, because as interest rates get squeezed higher and the currency is being destroyed, there'll be a bond sell-off, which will send interest rates higher. How much higher, I don't know. But that is a counterbalance. So that's highly deflationary. At the same time, the currency is being destroyed. So you have these two countervailing forces that are very, very strong taking place in the marketplace. So the best place to be is to live within your means, have some savings in real money, and be able to weather the storm. Do not count on hyperinflation bailing you out of any investment, including real estate. I think anything that's leveraged to debt is probably going to have a problem, the way I see this unraveling. And most economists won't tell you that, but I will. I think you need to live within your means. Don't be over leveraged. And certainly look at, I'll digress again, but look at in the 30s or even previous to that, these were callable loans. And you got to check your fine print on your mortgage. But the bankers came in and basically destroyed people deliberately by saying, hey, John, your mortgage is in those days $6,000, which would be like $600,000 now. We're calling that due. You either pay off your house or we're taking it back. And these people were flabbergasted. They had no idea it was a callable loan. So, I just want people to understand that inflation could be relatively modest compared to what happened in the Weimar Republic or in Zimbabwe, meaning only 10 or 20%, which is huge, and destroy the economy. It doesn't have to be, issuing a, $500 billion note in the next week, billion. And
let's not give many ideas for what. And it's just amazing how much we're on basically on point with so many different things. Because when I was interviewed last year by Ian Freeman, Free Talk Live, right as Anarchapulco was starting. I was the first person he interviewed. And I mentioned that eventually the Fed is going to lose control. And I don't think he initially understood what I was talking about, because he's like, well, don't we want the Fed to lose control? And so, yeah, I mean, I don't even want there to be a Fed, but the point was exactly what you were making, is that eventually they're not going to be able to say, hey, the interest rate's, 2%, and there's only so much rigging that they can do, that they could lose control of this whole thing completely, especially when we go from, printing, billions of dollars or trillions of dollars to now all of a sudden we're, having $600 billion a year, being, bled off the balance sheet. At the same time, you're having, the Treasury is going to have to at least issue probably about $1.5 trillion this year during, the greatest economy in the history of the world.
Yeah.
And, somehow I don't understand how, we printed 1.3 trillion extra dollars last year, and all these people still think it's the best economy. And so you've got all these different factors. I mean, not to mention, we didn't even get into the demographics where, in 2008, the baby boomers were only just turning 62 years old. Now, it's 10 years later. So, I guess 11 years later. So now they're, now they're going to be 73, and they're forced to take money. The oldest ones, at least, are forced to take money out of their IRAs and 401ks for the required minimum distributions, whereas in 2008 they weren't forced to do that because they weren't old enough. And so you're just going to see, and this is actually what I'm going to give my presentation at Anarchapulco on, is on the sequence of return risk, where it doesn't really matter what your average return is. It's really more important what the order of those returns are. So it doesn't matter if you're in Bitcoin and it averages 1,000% a year if you got in at 19,000. I mean, so, at that point, it doesn't really matter what it averages. And then also how it ties into interest rate risk, where these pension funds right now, I think on average are about 35% underfunded, which I got in trouble for saying that last year too, when I was still employed by my current broker dealer, because they said, hey, this is your opinion that they're going to go belly up, and that where are you getting these facts from? And I was even quoting, like, it was even like the government's own pension actuaries were even saying that the state and local governments were 35% underfunded. So they're going to get absolutely walloped from every single direction, is my is sort of my thesis on what's eventually going to happen. And it's not really, that crazy of a prediction. It's like, I put, I put this glass in the fridge and I'm predicting it's going to get cold. I mean, it's not like, it's nothing really crazy. And I have seen some other, so I'm going to have on, our next guest next week is going to be Tom Hegna, who's very, I'm not sure if you're familiar with his work, but I know that he is of the opinion that and this is where I wanted to kind of counter him on, that the rates are going to stay low forever because they can't afford to go up. And I do, I agree with him that they can't afford to go up, but eventually what the Fed wants to do versus reality and what the market dictates could be two separate things. And to your point, even if we only had, 10% inflation, what is that? Every 7.2 years, everything you buy is going to double in price. And so then you've got all the dupes out there who don't even realize, why they're getting poorer and poorer. And they're going to, then call to tax the rich, when I think it was like a third of Americans can't even name all 4 grandparents, let alone, understand who's, how real money works, because you've got a difference, because what we have in our pocket is currency. It's not actually money. And so that's a very important. And I've only listened to, very few of your works. And yesterday when I was picking up my daughter, I thought it was part of the Four Horsemen, but it was another interview that was talking about you and the Four Horsemen. I can't remember the gentleman that was doing it, but you had mentioned something that I thought was a good point, where you had mentioned that most financial advisors like myself say, hey, actually don't lump me in with most. That's like lumping me in with most economists. I mean, they're always wrong. So I don't want to be lumped in with them. So when it comes to, saving and investing, a lot of people, will say, hey, keep at least 3 months on the sidelines. Maybe if you're single, it's better to keep 6 months on the sidelines. And for me, if I had a client who, let's say they needed to keep, $50,000 to keep, their needed expenses, I would probably rather have them keep that in silver than keep that in fiat currency. Now there's, day-to-day expenses and business cash flow. I mean, you obviously want to have some sort of currency, to be able to meet those obligations. But for, the longer term, hey, I want to keep this here for 6 months, but I don't necessarily let's hope I don't need it at all. I think the odds of you keeping your purchasing power in silver is going to be a whole hell of a lot better than if you just kept it into fiat. And I thought that was a brilliant idea, where you were stating that, hey, it's better to keep this into silver in your own opinion. So just kind of want to get your feelings on that.
Well, thank you. Yeah, you just validated it. I think that is important. And I think it makes sense. You don't need to leverage or anything else. You can start a savings plan. Even millennials that might have modest incomes or relatively modest, might have big numbers, but doesn't buy a lot these days. You can start, buying silver pretty easily. The other thing is I have a video, I think it's in the 200,000 range, and I don't have many that have that many views, but it's called, I think, Myths in the Silver Market, Myth, M-Y-T-H-S, in the silver market. And I point out in that video, it's only about, 10 minutes long or less, that the amount of silver that's mined on an annual basis, if we had some kind of cover in silver, there's so little silver, it's so precious that people don't understand that it would, that it's so not only undervalued, but underappreciated. And I'll just go through the video really quick. But at the time I made the video, which is probably a decade ago, the annual mine supply was about 750 million ounces. Today it's about 850. And so I said, if everybody in the United States bought a little silver, well, let me digress a moment. One of my biggest pet peeves is most coin dealers, not all, will say something off the cuff like, well, everyone should have a little precious metals. Like, it's important, they get it, it's their business, but because of monetary history, everyone should really be educated about why precious metals are important. And then after that, I would add, everyone should have a little. So how do you define a little? So I define a little as 2 ounces of silver. And I said that the population of the United States, rounded up, is roughly 350 million people. So if everyone in the United States, meaning not just families, but mom, dad, all kids, every being that's a U.S. citizen, quote unquote, bought 2 ounces of silver, that would be 700 million ounces. So that would basically take care of the entire mining supply for 1 year. And then I pointed out that 2 ounces of silver at the time was about $30, or maybe it was 30 an ounce, I forget. But what I'm suggesting is $30, or quote unquote dollars, Federal Reserve notes, is not going to change anybody's life significantly. I mean, if you have 2 ounces of silver, it may help you, it might get you a few meals, it may, do whatever when silver peaks, but it's really not going to get you through for weeks or months. And that amount of silver held by the U.S. citizens in this, theory, in this thought experiment, is 5% of the world's population. So I went on to say, well, just think, what if the whole world had a little bit of silver, 1 ounce, half an ounce, where would it be? So people don't understand the true meaning of a silver standard. I mean, when we were on a silver standard, the people that were against it the most were the people that really started it, which was the pound sterling. It was the Brits. The Brits could clearly see very early on that having honest money in the system was not something that was going to work for them, meaning the banking elite. So they basically solved the problem by offering the silver standard and moving on to a gold standard. And that's something that I'll probably be speaking about tomorrow when I'm in, I guess you might call it a debate, with a friend of mine, good deep thinker. I'm sure it'll be a lot of fun for both sides. And I don't think it's really meant to be an argument, just more or less meant to be a discussion, but he's going to question me about the monetary aspects of silver. And of course, I thought about it before the debate, the interview, the discussion, and really there's 2 sides to it. One is silver money legally? And the answer is absolutely, completely, 100% yes. Silver is still lawful money. So that can't be debated. So at law, it's still money, but is it economically money? And that's where we get in more of the discussion, because who's going to walk into a Walmart with constitutional silver, which is a good place to start, by the way, back to one of your earlier questions, a bag of what's called junk, it's called constitutional silver, but a quarter that looks just like the one in your pocket if you're in the United States, but it's silver, 90%. You can walk in with 4 of those and buy, I guess, a pack of gum these days at Walmart. Now, even though you're overpaying by a huge factor,
it would not be advisable to do that. So
not be advisable to do it, but it could be done. So that's my point.
And that's a good point, because one of these groups that I see on Facebook where they're trying to pull at the heartstrings, and they call it patriotic millionaires, where it's basically these big time leftists who are trying to say why the taxes need to be 80%, and why there shouldn't be why people shouldn't even inherit any money, and these are rich guys that are saying saying this, so they must be, virtuous. But, what I wish people could understand, especially lower down in the, socioeconomic spectrum, is that if you were, let's say in 1964, and I don't know what the minimum wage was back then, but let's say it was, $2. But the dollars, let's say if you express that you're getting paid, 8 quarters. Well, those, 8 quarters today, would be worth, was that like $30, that it could be worth today. I mean, granted, 90% silver. And so it's not really, it's the fact that your money purchasing power is, as you were mentioning earlier, is getting worth less and less and less. And so you can raise the minimum wage all day. I mean, if you're going to raise it to 15, why don't you just raise it to, $50 an hour? If you're going to raise it to 50, just raise it to, everyone gets paid $1 million an hour. And I guess the Democrats and the left, maybe they can make everybody billionaires if we have enough, inflation, and just $1 billion won't buy you anything at the rate that they're going. And it's just, I don't know. I just wish that I could at least try to get my generation, because unfortunately, I don't like being lumped in with the millennials, but I'm at the I guess the older end of the millennial spectrum, which I feel like I've got no, especially I went to a liberal arts school. I mean, somehow survived living in New York with my head screwed on, and it really almost just radicalized me even more, because I just realized that everything around me was just so wrong. And I mean, I took a class on the Federal Reserve where we won there's a national competition on the Fed where basically you act like you're, at the time, Ben Bernanke. And this was 2007, 2008. And I was being told you can never have another financial crisis again, because everything that happened after the dot-com bubble, we've shored up the system. And this is while we were technically in a recession, or just about to go into recession, that I had teachers telling me we could never go into one. And the whole path of how I got, down this whole rabbit hole is one day this guy who looked like the singer, I don't know if you know him, Rob Zombie, this hard, heavy metal guy. This guy looked like him, and, he's got his hair, down really far, and dreads and everything. He looks all crazy. And he's telling me the Fed is private, and I'm like, man, you're full of crap. I've got a Series 7 and 66, and I was on the class that did this, and I'm on my way to being one of the youngest people ever to get the certified financial planner exam, and you're trying to tell me that the Fed's private. And then that led me to Freedom to Fascism, which was a documentary, which led me to my girlfriend, now wife at the time. She happened to go to Borders, and she wanted to shut me up. So I didn't even know this book existed. She bought me Creature from Jekyll Island. And that was the book I started with. And so a lot of people, they kind of end with that. And it led me to Ron Paul and everything that we're sort of into now. And so it does sound crazy to a lot of people until they actually, peel back the hood a little bit. And I want to let people know, if I only got into this because I was trying to prove somebody wrong, and I found out that I was wrong, and I was, willing to admit that I was wrong. And my whole thing was, well, if I didn't know this, and I had all these, supposed credentials and stuff, and I was in the class that won the competition against Harvard and Yale and MIT, and I didn't know it, like, who the hell does know this? So I feel like it's been the greatest trick that's ever been basically pulled on the American public. And unfortunately, in that book, they talked about how, I believe, what was the guy's name? It was the guy who played Paul Warburg said, we shall have a one world government. It's only a matter if it's through consent or conquest. And unfortunately, I feel like you're going to have people that are begging for this. And with, my generation and everybody wanting free stuff at the same point that we're in this whole debt spiral, it just seems like we're just in such a calamity. But who knows? I mean, there's some economists out there who thinks that the dollar could actually, temporarily strengthen throughout all this, because, people always do the wrong thing at the wrong time. You had, what was it? I think it was like August 3rd, 2011. You had the Treasury, or I think it was either Moody's or S&P downgraded the U.S. debt. And let's say you had advanced knowledge of that, like, what would you do? You'd say, okay, well, now the government has less of a chance of paying me back, so now I'm going to demand a higher rate of return because they're a less creditworthy borrower. But then the rates went down. I mean, so it's just like, so I'm almost thinking that in the short term, you're actually going to see the dollar go up because people are idiots and always do the wrong thing at the wrong time. And so unless you then have, for lack of a better word, the balls to go into something that is then, decreased in value quite a bit, I just see just so many people are just going to get shellacked, at some point in the next, I don't even want to put the time frame on it, because, if I put a time frame on it 10 years ago, I'd probably would be off by 3 or 4 years, because it seems like they keep pulling rabbits out of their hat. But the next time, I just don't know how the Fed can pull another rabbit out of their hat at this point. And I don't know, do you think they can get away with a QE4 or a QE5, or how many more of these do you think they're going to be able to pull over on us?
Well, it's really hard to say, but before I add on to that, I just like to say I'm a big believer that we'll see the dollar and gold go at the same time. What will happen is, as things start to unravel and the markets recognize it, money has a mind of its own, and it will seek safety. And the one safety feature that most believe and will continue to believe for some time will be that the best thing to do is go to cash. So they'll get out of that over leveraged real estate or that bond fund or that mutual fund or whatever it is, and it'll go to cash. So there'll be a run to the dollar, the US dollar, at the same time there's a run to gold. But what will happen is you'll see a bifurcation, because there'll be that aha, that one-handed salute. My goodness, wait a minute, I'm getting all these dollars, but they're going to be worthless, or going to be close to worthless. I had better take these dollars now that I'm liquid and move it into gold. And that's where you'll see the gold and silver markets really take off. So that's what I see ahead. Could be wrong. I'm a big believer in the extra pyramid. I was one of the first. In fact, I'll take credit for it. I was the first to bring the extra pyramid back to the discussion. Back when I started on the speaking circuit, I was talking about a liquidity squeeze and what would happen when the financial markets crash. And I was having dinner with Jay Taylor, and Jay's a friend of mine and pretty smart. We have a different philosophy as far as investing goes. We saw both precious metals bugs, but I started talking to him about this, and he hadn't heard of it. And so I brought it to the discussion, and I published an article on it years ago, and it's been brought up by many more people. I'm not trying to take credit that I invented it or anything other than studying it, but no one had really. It was very popular in the 1970s in the first bull market. A lot of people knew about it, referred to it, but when the bull market started again in the early 2000s, no one was talking about it, for the best of my knowledge, except me. And of course, now it's open for discussion. So back to, will they go to QE 4, 5, 6, and 7? They'll try everything and everything. As I said, Jim Poplava did the study, so they will absolutely destroy the currency. And just how much can the market be abused? At what point do you have that, what I call that psychological effect, where the average guy on the street says, I'd rather own a big jar of peanut butter from Costco than own this $20 bill. And when that happens, you can't turn it back. And that's a psychological event. And once that happens, as I said, I'm repeating myself, it can't be turned back. So when your neighbor says, they may not even buy precious metals, they might be able to afford it, they might know about it, but all they know is that dollar that they got that week is probably going to purchase less a month or two out. So they're going to buy something that they can use or barter than hold on to it. Now, that sounds extreme, and it is, because we're in extreme times. And these things only take place every so often in monetary history. I mean, a lot of monetary history, you don't even need to buy gold. You don't need to hedge yourself. You don't need any of the stuff that we've been discussing for the last 20 years, because it's pointless. But in times like these, if you don't understand how the system works and how it's rigged against you, you're probably going to pay a dear price.
Yeah, and that's I always say in air quotes how the system works, or how it doesn't work. I mean, it works to basically help bankrupt the average tax slave that's out there, who doesn't know any better and then keeps voting themselves in for the same problem that basically got them there in the first place. And as you were speaking, another thing that came across my mind is you have I think a few weeks ago the Trump administration mentioned that the Chinese are going to buy X amount of hundreds of billions of dollars of goods from America, and I don't even know how they can even force them to do that. But where are they going to get that money from? I mean, are they going to sell their $1 trillion position of bonds? Because that seemed like a pretty likely place to go take some, hey, we got some extra money, let's go buy some American crap. And for me, and this is, I feel like Trump supporters always get mad at me when I point this out, which, you want to talk about a term that you sort of coined. The only thing that and this sounds super outlandish, but I had from my Facebook page, November 16th, 2016, I was so pissed when I read on Zero Hedge that they basically said that, everyone that we probably follow is fake news. They came out with a fake news list. I instantly made a meme called Fake News List, and it was, CNN, Snopes, BuzzFeed, all the usual suspects. I only named one person by name on that list, and it was Paul Krugman. And then Paul Krugman then won Trump's award for being most fake news. And so I had 2 assistants for like a week. I did nothing but I'm like, I want you to find someone that had that term go viral from Facebook or Twitter or wherever before me, and they couldn't find it. And then no surprise that my Facebook reach went from 1,200 subscribers a day to 0 within the span of 2 days. And then it's been stuck at basically, the amount of people I piss off versus the amount of people that are coming back on, pretty much like a ship that's bringing on just as much water as it's taken off. Because a lot of people think, oh man, this guy's against Hillary, but then I start spouting off on pro-freedom aspects and taking the philosophical approach, and people don't like that, which is why I commend you, because it's not a very easy position to take. Earlier you touched on Jeff, because some people have problems with him every now and then, but I would just say for anyone that's gone down the rabbit hole this deep, it's not a very easy thing to sort of deal with, especially, if you're, like when I found out about all this stuff, I was probably, 25 years old, and, it's very depressing when you, realize that, the entire life that you basically have thought that you understood is all basically a lie. And it's not a, necessarily an easy way to cope. But now with the internet and now with blockchain technology, I feel like we've got a good chance of being able to, really at a crossroads where this technology can be used to further enslave us and be the worst thing that could possibly ever happen, or it could be the thing that absolutely frees humanity. And so I think that we're in this absolute vital fight, I guess, for humanity right now. And before we, let you go, I would also want to, know a little bit more about the Morgan Report and what people can find there, because I'm not really too familiar with it. Is this something where you do you give recommendations on like mining stocks, or we want this one over that one, or is it, hey, just silver in general, that now is a good time to buy or sell, and just want to talk, to our listeners a little bit more about what they can expect if they were to become a premium subscriber at the Morgan Report.
Oh, great. Well, thanks for that opportunity. I'd be happy to answer it. Before I get there, I want to just digress back in our discussion. I told you about, Jeff in the beginning, and that we were at that conference together, and I had lectured on freedom. And this is for, your Facebook group or anybody that cares to listen to it. But at the end of that lecture, I put up a picture of a lion in the savannah. And I don't know, but the picture, the old adage, a picture speaks 1,000 words. I mean, if you can imagine a lion in all its majestic glory, resting, looking out over the savannah, clear eyes, distant vision, strength and power, but it's totally at rest and totally at peace. And that is a lion being a lion. Wow, David, what a profound statement. And then the next picture I put up was a lion that had everything provided for. It had its health care, it had its food, it even had its mate provided for it. In other words, we might call it the utopian or socialistic ideology at its finest. This lion didn't have to worry about anything. And it was sunken eyes, it was dirty, it hadn't taken care of itself, and it basically wasn't even interested that much in its mate, and it knew what time it'd get fed. And that to me was a contrast that shows the difference between real freedom and not even knowing when that next meal's coming, but being able to be what you were created to be, a lion, versus, let's call it, the socially correct or the utopian ideal that just because you are alive, you are gifted certain properties from somewhere and bequeathed to you. And really what it does is it takes away everything that that lion stands for. It takes away its dignity. It takes away its ability to think. It takes away basically everything that gives it a soul. And that's my opinion. You can take it or leave it. But I wanted to give you that metaphor. As far as the premium service of the Morgan Report is concerned, basically it's pretty simple. We cover all the resources except energy. I have a separate newsletter I just started 2 weeks ago that focuses on energy, all aspects, not only oil and gas, but all the renewables like solar, wind, geothermal, et cetera. That is a free webinar. You go to Coming Energy Boom, ComingEnergyBoom.com, and look at the energy report. But the basic commodity report, which is basically the mining mineral sector, which is, battery metals and the base metals and the precious metals and rare earths and everything else that surrounds the space. It's a monthly publication, and it's in electronic form. Most by people print it out. You have a special access code that you're given that greets you with your name. First thing you do is download how to use the Morgan report. So you put in right amounts of money and you divide it appropriately between the sectors, a top tier, mid tier, and a speculative section. And then on an as required basis, I come on the screen and I make a video, and I'll show you what I'm doing to time the market. And it's not just the precious metals. It could be the bond market, it could be the stock market, it could be the US dollar. And I'll give you my opinion, and I'll show you exactly what I'm doing, long, short, hedge, whatever. And I do that basically real time. Once I complete the video, I send it to my webmaster. And we have a unique alert system that no one else has. Unfortunately, right now, it's only available on a desktop. We're going to try to get it converted over to, the mobile devices, because so many people just do everything off their phones these days. But it is something that no one else offers as far as the alert system that I know of. Most people have to rely on email. And we know email isn't that reliable. So we started this bypass to the email system a long time ago for our premium members. And lastly, and one of the most important things I think is that you get to ask me or my staff 2 questions every month, and you're guaranteed an answer. So a lot of things, when I started reading, what I thought were great thinkers primarily in the honest money movement, the free market space, I always wished I could have, picked up the phone or whatever and get my 1 or 2 questions a year answered. And I thought that would be a great adjunct to the service that people get. I'm not sure how long I'm going to be able to continue that. Our paid subscriber base is down like 60-70% from where it was in the peak of the market. So I can offer that because I don't get overwhelmed with requests. But there may be a point when the market picks back up that, starting, and I'll just give it a date. I'm just making one up for now as an example, but, December 2019 is the last time I'll offer that feature for new subscribers, because, once we start getting overwhelmed with, requests for questions, and there's some people that never ask me a question. There's people that every month they get their 2 questions in no matter what. That's fine. They're paying me. I'm willing to do it. I'm happy to do it. So maybe I overspoke it, but that's it. I mean, first thing, what's next is you sign up, and then you get all the information. And of course, there's a money back guarantee. I mean, we don't want anyone on board that really doesn't belong there. It isn't really beginning.
Is that a currency back guarantee or money back?
Yeah, money back. There is a caveat in there. If you do the monthly plan, we keep the first month, because we've had people come in, download everything off of the website, and then reuse it. And so a slight protection is when you sign the terms and conditions. If you do take a month and not download anything and don't like it, that's it. We'll keep that 1 month. But almost everybody does that these days. But no, it is what it is. I mean, most people that have had another exposure to, let's say, the large newsletter houses, the Agoras, the Weises, the Stansberrys, et cetera, and are familiar with the industry, are overwhelmed with glee to see what we provide, not only for the cost, but comparison as far as the quality of research and the type of picks that we have versus, let's say, some of the more robust, basically ad copywriters.
Yeah, and you see that out there in the space where there's, all sorts of people that are, basically, I don't want to say, selling fear, where it's, hey, we've got this limited time thing. And you see like there's certain sales tactics. And I've got clients of mine who are on some of the email lists that you had described, or they just mentioned earlier. And, oftentimes it just sort of drives me nuts, because you've got some video where you can't even skip to the end. You've got to wait, 50 minutes to see whatever the punchline is that they're trying to get to. But I think the last thing I want to leave here with, because my good friend, Dr. Frank Tamburi, would probably be upset if I didn't ask this, because yesterday he just happened to ask me a gold and silver question. I'm like, well, I'm going to have on one of the biggest gurus in the world on tomorrow, so might as well save it for him. But he would point out that I believe his father was reading some report where they thought that, I believe it was Rand Gold was going to, I forgot if Rand and Barrick had a merger. I forgot which one which name that they're end up keeping. But the mainstream economists, and these are very not mainstream type guys, but they just noticed that even mainstream economists just started, or stock analysts were talking about it going from 15 to 70. Obviously, this is not financial advice, and we're completely speculative, but I'm wondering kind of what your thoughts on that, because you're seeing, it seems like there's more and more consolidation going on in the gold space. And I'm not a gold expert. It's not the main field that I'm dabbling in, but I know just kind of seeing all the headlines, it seems like there's more and more consolidation. And, it seems like it's almost like a leverage bet if you are going into the mining space, because, if the precious metals were to move up, 1% to 2%, and you're probably going to see the gold stocks moving up more. Although that doesn't always happen, and there's been a lot of weird scenarios I've seen lately where one is down, the other one's up, or stuff that just doesn't make sense is going on. And just kind of last, I guess, comment would be on kind of the consolidation of the gold market, and I guess what your thoughts would be on like the Barrick and Rand merger that happened recently.
Well, I'm not that favorable to it. It will be a go-to investment for institutions, although they still use, the GLD and the SLV primarily. Risk profile increases, not decreases. That sounds counterintuitive because, you're diversifying over a larger land basket in a different geographical area. So that should decrease your risk. But some of the areas that Rand Gold holds properties, I'm not that favorable to. And that's not just my opinion. If you look at the Fraser Institute, they'll back me up on that. I'm a little more favorable to the Goldcorp Newmont, although I don't think that Goldcorp got probably everything that they might have. But I don't like, I equate it to the banking industry, and I'm not trying to equate gold to the banks. What I'm trying to suggest is that the bigger something gets and the more consolidated something gets, usually the more sluggish it is. And for these huge conglomerates or these huge gold corporations to be able to replace their reserves becomes a daunting task over time. I mean, they can't look at deposits that are 1 or 2 million ounces of gold. They've got to look at stuff that's like 5 million ounces. And there aren't very many 5 million ounce deposits left. There'll be some, and there's a few that I'm, think that are there based on, study. But back on point, I don't like it. I think I think you could get too big. I think you can overdo something. And this is typical of what I call the basic American philosophy, if big is good, bigger is better, supersize me, super this, super that, too much, too much, too much. And it's happening in the gold industry as far as I'm concerned. I'm not favorable to either one of those mergers on a personal level or really on an investing level. I think it'd be better off with a smaller situation, but, I'm not running the world and no one asked me to, so I'll leave it.
Yeah. Well, that's funny. So it's sort of like, you got like the AOL Time Warner merger, and way back in the day, and was that sort of, ringing the top of the bell over there. And it's also like, are you going to be in an agile speedboat or be in, I don't want say it's going to necessarily be the Titanic, but you got a heavy freight oil tanker versus a more agile ship. But we definitely appreciate having you on today. You guys can go to themorganreport.com to check out everything from David. Depending on when this comes out, he may or may not be speaking at the TDB, or already have spoken at the TDB Investment Summit down there at Anarchapulco. So I'll also highly recommend everyone checks that out as well. Tons of great speakers, tons of great information. And thank you for being on the show today, David.
Yeah, I just might add one more thing on that film that you alluded to very early on in the discussion. It's called Four Horsemen Film.org. If you just type into Four Horsemen, you're going to get the old movie. But if you type in Four Horsemen Film into a search engine, or fourhorsemenfilm.org, it's free on the internet. It's about an hour and a half. It's a good, weekend or after work kind of a viewing thing. And it doesn't really blame the bankers. It doesn't really blame very much. It just, a lot of people that have a lot of thoughts about the system as it is, talks about the end of the age of empire, why it's cyclical, and where we are in this cycle right now. And it's a really good, in my opinion, objective view of this cyclical, monetary age of decadence, top of the market, and what's going to happen next. And it's a good mental exercise, and it's a very well done film. And it's not because I'm in it very briefly, but it's the overall documentary that's so valuable to most people, especially those that are kind of like, well, I feel something's wrong, but I can't pinpoint it. This does a pretty good job of pinpointing it.
Yeah, there's so much stuff to pinpoint, and the time to check into all this stuff is when no one's looking at it. So right now, I don't know what the price of silver is today. I think it was yesterday. It was close to $16, like 15.99. Better to check it out today than if it's at, hypothetically at $50, which is when everybody will start rushing in to check this out. Just like Bitcoin, everyone's knocking down my door wondering about Bitcoin when it's at 10, 15, 20,000. And then now that it's relatively speaking a much better time to get into it, no one cares. So that's the history of life. That's the history of how things work. Anyways, go to themorganreport.com, check out all of David's work there, check out Four Horsemen, and we'll have some other stuff in the show notes. I believe it was comingenergyboom.com was the other one that you'd mentioned. But thank you for having us, and look forward to seeing you now probably in like 2 weeks down there at Acapulco.
I can hardly wait. I'm ready to warm up. Thank you.
Yeah, thank you.
Thank you for listening to the show. One of the ways you can help support the show is by seeing if it makes sense to invest with myself. I'm a certified financial planner with Innovative Advisory Group, LLC. Innovative specializes in self-directed IRAs where you can invest into virtually anything, including virtual assets and cryptocurrencies inside your retirement accounts. And get this, you can actually hold on to the private key. And that's something that nobody else is doing, at least with the help of an advisor. We also run protective growth portfolios where you invest a small amount of your portfolio into put options, and that basically helps protect the rest of the portfolio. Not very many people are familiar with put options, but a lot of people are familiar with homeowners insurance, and it works in a very similar fashion. So essentially what you're doing is using a very, very small percentage of the value of the home to protect the rest of the home. And if the house doesn't burn down or there isn't a major catastrophe, then you're basically out on the cost of the insurance. Flip side, on if your house ends up burning down, well, then you build your house back. And that's really the same thing that's going on here. So if the market ends up tanking, and we know the most that you can possibly lose on your investment, and honestly, if the market were to go down 60, 70%, and you're only down single digits potentially, then that's an amazing buying opportunity. Lord Nathan Rothschild said it best, that the best time to invest is when there's blood in the streets. But if your money goes down with everybody else's, then you're not able to take advantage of the next crisis. And also, if you're just camping out in cash or in bonds, making next to nothing, you could be going broke safely for a very long time. And then you've got to know when to time the market. And that's something that basically nobody can do. Now, on the flip side, if I'm wrong in all this and the market keeps going higher, or the Federal Reserve comes out or the European Central Bank comes out and says, hey, we're going to print a whole bunch more money, and the market goes to infinity, well, then you'll go up to infinity minus the cost of that put option. So I think that this is a great strategy that you definitely want to learn more about. I mean, just given the craziness that's going on right now, if you're heavy into cash right now, heavy into bonds, or even heavy into stocks, especially if you're close to actually needing those funds for retirement, or just needing those funds in general, maybe for a big project, or maybe you work on a crypto and you raised a whole bunch of money, that this is something that we can help protect yourself and protect your loved ones. And there's nothing you have to lose by scheduling a free consultation with us. And actually, there's a chance you could lose a lot by not talking with us in general. If you go and click on our website in the upper right-hand corner, there's a Work with Tim button up there. You can see all of our plans, ways we work with our clients. Pricing can all be found there. And given that I'm sort of out there on a lot of different political issues, I know that I'm not going to be for everybody. That's sort of my way of qualifying you, not the other way around. But, I'm fine. I'm not trying to have all 6 billion people out there like me. And I'm here to really, at the end of the day, to tell the truth and to make money, not necessarily make friends. So head over to thelibertyadvisor.com and let's see what we can do for you. Thank you.